Will DeFi replace traditional finance? Will Bitcoin Ordinals cause Bitcoin transaction fees to skyrocket? And is this the end of the US dollar as the world's dominant currency? Today, we welcome Mate Greenspan of Quantum Economics back to the show to answer these questions and discover how a simple Bitcoin price prediction may or may not have caused a $2,000 spike within hours. We're here for cutting edge info you can use, wrapped in quantum silliness. This is episode number 680 of the Bad Crypto Podcast.
5, 4, 3, 2, 1, 0, ignition.
Who's bad?
What do you call it before it's quantum, right? If we're before quantum physics and quantum computing, what's the current terminology for?
Well, they just call it physics, right?
Just physics?
I think so. I don't know if there's maybe there is another term, but what is it called before you eat the corn, before it digests? What is it? That's what it digests, so it's just still corn. What do you call it after it's still corn? Quantum corniness.
Corn is corn, any way that you slice it. Welcome to the Bad Crypto Podcast, the show for the crypto curious, crypto serious. Over 10 million downloads, well into our 6th year. In fact, July 18th will mark 6 years of doing this silliness with Sir Lord Travis Wright. There's no sign of stopping. Sorry, not sorry.
You know, we keep seeing the technologies, we keep finding ways that they work, and we want to explain them to you as we are figuring them out ourselves. There's a lot of stuff that's going on, and it just feels like this conversation is going to even validate that. It just feels like we are edging up out of this bear market into another big bull run potentially. So it's about to go boom. Not financial advice, but it should be good. It should be fun to pay attention to.
Well, you know, it's been years since Mate's been on the show, and this interview was really triggered by a tweet that I saw him make, and we're going to share more about that.
Wait, you were triggered? You got triggered?
I got triggered.
Oh, man, Joel got triggered.
I can't handle it anymore. Go listen to this interview. And it's been a long time since this person has graced the Bad Crypto Podcast here at the Republic of Bad Cryptopia. The last time that Mate Greenspan was with us. Oh, that you don't go Mate, right? You go by Matty, right?
Mate, correct.
You do go by Mate. All right, let me do that.
People say Matty. I don't correct people unless you ask.
You go with Mate. Okay. Take two. And it's been a long time since this guest has graced us here at the Republic of Bad Cryptopia. As I can pull up for those of you watching the visual version, it was October 14th, 2019, episode number 320, that Mate Greenspan, who was with eToro at the time, came on the show and talked all things Bitcoin and cryptos with us. He is now free of the corporate shackles, and he is the founder of his company, which is Quantum Economics. And we're going to talk again about Bitcoin and cryptos and things. Mate, welcome back to the show, sir.
Thanks for having me, dudes.
Yeah, this is actually, Joel, this is not the last time we talked to him. He was on the virtual blockchain week as well. So we interviewed him on that for an episode, but we had so many awesome people on that, and Mate was just another one of the awesome people. And he's been doing some stuff with quantum economics now and making some pretty good calls. In fact, you mentioned to me, you said, dude, Mate said that on Thursday we're probably going to hit 31,000 or something, and then we did. And so Matt is either a soothsayer or Nostradamus, one of the two.
Let's give context to this because the show airs a little later on April 10th. He posted that in 10th, I believe was a Monday, that Bitcoin would be 33,000 by Thursday. And at that time, it was 28,000. Over the next I want to say 10 hours, Bitcoin went up $2,000. And I tweeted, I'm like, what? Because we've been going sideways for weeks. And all of a sudden,
3 weeks,
and it goes up. What happened?
Yeah. No, I don't. Well, as I probably told you before, I don't predict what's going to happen. I don't predict the future. I don't know. And the disclaimer comes to mind: past performance does not indicate future results. And anybody who tells you that they can tell you what's going to happen in the future is certainly lying, including myself. So I don't know. I've been toying with price calls since I left eToro. I mean, obviously, at eToro and with a financial license, there was always this you cannot be wrong attitude, and therefore, just don't predict what the future, and you won't be wrong. You'll be okay. So lately, I've been advising on this platform called Woobits, which is the link that you showed there on my Twitter portfolio. And it's basically a social network for Web3 with smart contract enhanced monetization methods. And actually, they even just put in real easy to use GPT and Dolly photos. So you could just making it easier for creators to use these tools. And they have this feature called price calls. So this is just me testing out that feature. And there I am with the serial head NFT.
Okay, looks like another social network that we need to sign up for, and
it's the next generation social platform for Web3 enthusiasts, Joel.
Nerds.
The CEO Albert, every time he tells me something, I hear Elon Musk saying it 2 weeks later. I don't know how he does it. He's just ahead of the game.
That sounds good. We'll have to keep an eye on that for sure. But we've been keeping an eye on you. So tell us, a lot of people are saying that, hey, we are, again, past performance does not indicate future results, but we are 1 year away from the halving ballpark-ish, right? That tends to seem to be the time when things start working its mojo, baby. So what do you think? Where are we in the time scale? 2021 was good for a lot of us. 2022 was not so great. 2023 started out meh. It's starting to look better. It's starting to look like the beginning sniffings of that next bull run, baby.
2023 started out, I think, the best year for Bitcoin ever in January. And it went up 40%, I think, in January. Don't quote me on the number, but I'm pretty sure that was around that ballpark.
It looks like we were around 16.5 at the turn of the year. And as of this recording is happening on the 19th of April, 2023, Bitcoin is currently down a little bit from where it was yesterday, 29,290. Is it because the SEC, Gary Gensler, and all this crazy silliness, is that spooking people?
Well, you mean why is it down today? Actually, I think that today and yesterday and the last few days is kind of trading in a range, literally. But I do believe that the banking crisis added fuel to the fire. January was just an anomaly. The year just started out with a bang. There's no real literal explanation for it other than the price was low. Look at the average prices people were buying. Then when the banking crisis hit, I think that gave it an additional boost to Bitcoin because obviously, Bitcoin is the alternative to banks and governments who are causing all the problems, people losing faith in the US dollar. And now we have Russia and China, Saudi Arabia and Iran all making friends, which is very uncanny and a bit scary. And that's all bad news for the buck. And that makes people want to flee the ship. Best way to do it.
Best way. What was interesting to me, and I don't even think Joel and I have even mentioned this at all or chatted about it yet, but I was watching a thing about Gary Gensler, and he was talking about regulating crypto, but he's never actually used an L1 platform. He's never actually used crypto, and here he is regulating it. That's like saying, I'm going to get on the Facebook, but it's the internet, and I ain't liking it. So I'm going to vote against it because it's just weird to me. You know what I mean? And hello, friend. We have a new friend on the podcast. What is up?
This is Orr. He's 4 years old. He's been since he was 2 years old, and he has his own YouTube channel where he plays Roblox.
Awesome.
Oh, so very nice.
When he turns 5, are you going to call him Ive?
Ive.
Yeah.
He's 4 and he's 4. Okay. I got it. Yeah. No, I thought that it was amazing how Gary Gensler could not answer a simple question. They're asking him, is Ethereum a security or a commodity? It's got to be one or the other. It can't be both. Right?
And he wouldn't answer either
Joel
one.
And Travis.
Can I talk to him?
Yeah.
Hello.
Hello.
Hi.
Whoa, nice to see you there, Or. And if you're tuning in, listening in the podcast, you don't see there's this awesome little Mati Jr. basically hanging out here on the TV.
What do you think, or what do you think about Bitcoin?
Yeah.
Yeah, is it cheap? Is it expensive or is it cheap?
Expensive.
It's expensive. Uh-oh.
Uh-oh.
Is that a sell signal right there? Is
That is right there.
You heard it here, folks. Sell Mortimer.
All right, go watch TV.
So, we're talking about Gensler and the SEC and him not, him just being bad as, a chairman of the SEC. And we've got people that are calling for his resignation. Of course, none of these people in this administration ever resign, no matter how disgraceful they are. They stick around and do more destruction. So
in the United States, that's true. Yes.
Yeah, in the U.S., it's
I've seen UK politicians. Well, it didn't go my way, so let me resign.
It's a
the
little different.
accent.
Yeah,
It's a little bit different over there with that, mate. But what's interesting to me about Gary Gensler and the regulation of this whole thing, not having used it, Janet Yellen really not familiar all that much, has not really used it. From what I understand, Elizabeth Warren hasn't really used it. But how do they in all consciousness feel like they can regulate it if they don't even know anything about it?
No. Regulate implies that they're trying to help make sure that it works properly and that everybody's doing it properly. There isn't a way to regulate it. Literally, Bitcoin was invented as a way to transact without the need of banks and without the need of the government. And quite frankly, they can do whatever they want with it because we now have the power to do whatever we want with it. Right.
I want to get to that in a minute and get a take on this, but to set the stage for it, in the last few months this year, we've had all kinds of horrible things happen in the financial markets, and most recently Signature and SVB have really alerted us to what's going on with the banks. From your perspective, what triggered that? What caused that?
Oh, that is actually a very good question, Joel. And I point my finger directly at the Fed and under Jerome Powell's leadership. And if you look at it, actually, what happened was that SVB bought bonds, long-dated bonds, meaning that they bought them in 2021. Money was flowing in. They didn't really know what to do with that money, but they had to park it somewhere. And the Fed at that time was saying, long-term bonds are a good investment because we're going to keep the interest rates low for a very long time. The Fed was literally telling them this at that time. And then the Federal Reserve switched their attitude within a 3-month time period from very cheap money to very expensive money. And they raised interest rates at one of the fastest clips in history of the United States. So basically, they basically rugged SVB. Like literally, they told them you should buy these bonds. It's a good move right now. And then once those bonds got expensive, the yield of the bond goes up. And when a yield of the bond goes up, the price of the bond goes down. So if you're holding several $1 billion worth of bonds and the yield spikes on you, the value of those assets plummets, right? So basically, it created a large hole in their balance sheet. And when people got wind of that hole, people do what people do. They say, wait a second, if everybody tries to cash out now, they're not going to have enough money. This is a run on the bank. This is basically, we know the psychology of it. It's basically the same psychology that led to the toilet paper crisis of COVID, right? It's like, there's probably enough toilet paper out there, but my dumbass neighbor, right? He's going to think there isn't enough toilet paper. So I better run to the store before he does, because if I don't, I'm wiping with my hand.
You can use leaves like before your hand. There and
got plenty of them over
a t-shirt. Here. I mean, you went right to the hand, and I'm like, come on, there's a lot of in-betweens there.
Dude, I got like 2 bidets in my house. I don't even use them. I'm like, but it seems like a bidet seems like a much better solution than a hand. Because then you get it under your fingernails, and that's just a whole other scenario. You don't want to go there. Man. So you know what? I actually talk about the bonds and stuff, because we had the conversation. We had Tika Tiwari on our show in January. And I asked some questions. He was busting my balls. And he was like, no, man, because you want to put your money in bonds, the yield on them. Like right now we literally were hedging our bets. He was talking about T-bills and bonds. And because of the 1 month bonds or the whatever, because there was value in that. And he looked at me like I was crazy. And I was like, dude, we're like near the end. Like the dollar looks to me like it's near the end of the life cycle of paper money. Like the world economy is teetering. We just had, the UK, the Bank of England saying that they are insolvent, right? And there's some crazy stuff going down. And like, what? He was like, oh, bonds or whatever. And I was like, really? And then he acted like I was an idiot. And so I was like, okay, well, we were sitting face to face too. And I was like, and then here we are. We've not really recommunicated with him after the fact and be like, well, SVB just shit the bed, yo. And they were doing the bond thing like you had suggested. SVB? But it was a couple months before SVB, but it wasn't the they weren't. I think they weren't. They were. He was talking the short 1 month ones or the 3 month ones, not the long term ones. So maybe the yield is a little different on those. But I was just like, I just never had faith in the system since I learned about the corruption in July of 2000. When I learned that paper money is fractional ownership, and I thought the stock market was a little wonky. I thought things are going to start rug pull. I just learned I was red pilled a little too early.
Well, let me give you some much needed confirmation bias, Travis. When you're buying a bond, essentially what you're doing is you're lending money to the government.
Mm-hmm.
Yeah, I don't know if you are familiar with the government. They're not very good with money.
I don't know if I heard about that or not, but it seems to me like
they're literally more than $30 trillion in debt. And
how is it that you take 40% of everyone's salaries and you're still 30 trillion in debt? Seems like the government needs a money manager better.
With all due respect to Tika, I would not buy bonds if you put a gun to my head. I don't know what the government is doing with that money. I don't know where it's going. Mm-hmm. And I'm like you mentioned, I'm mad enough that I have to pay taxes. So no, giving them more money, it doesn't really compute for me. Think about this. The president of the United States is in power for 4 to 8 years. He is able to borrow money for 50 years or more. His direct incentive is to borrow as much money that he can without worrying about how it's going to be paid back.
Right.
This is a system you want to lend money to? Not me.
Right.
And dude, I'm out. Like literally, there are a million better investments than that.
So the dollar is struggling. The US government is struggling to have regulation around crypto. They're scared of crypto. You've got some predictions about what's coming next, and I want to take them one at a time as I'm reading them here in the written word. Let's just tackle these. The first one is that DeFi will completely replace traditional finance. Isn't this hopium? Like there's so much power in the governments and the Fed. Isn't this hopium?
No. See, Joel and Travis, you guys live in a bubble called the United States.
Yep.
I mean, even Puerto Rico is part of that bubble. Yep. There's a whole nother world out there. So the United States is the regulatory unfriendliness or harshness, or however you want to call it, their uncertainty that they're doing on purpose in order to try and squash it. That is not hurting crypto. That's hurting the dollar. All right. This is, I don't see any other way to see it. The dollar is supposed to be a global reserve currency. They've weaponized the dollar by kicking Russia off of the system. That hurts Russia in the temporary, but it also hurts the dollar because the dollar is no longer a global currency. I can't transact from the United States to Iran in dollars, even if I really want to, even if I have a relative there, even if I want to support somebody who's protesting the Iranian government. I cannot send them money, literally, not with US dollars, but I can send them Bitcoin. Right. So they basically harmed the dollar's utility by kicking Russia off the system, by kicking Iran off the system and several other countries, by having a silly spat with China, potentially a proxy war. I don't know if you want to even go there. But now this war with crypto, I don't know if you know this, but 45% of Nigerians are already using crypto. I mean, adoption rates are 40% in a lot of developing countries. they've just basically cut off all of that business and all of that transaction ability with the US dollar. That just limits the dollar's utility even further. It doesn't limit crypto because crypto is borderless.
Right. That's one of the things. So my girl is in Russia, so I can't send her how money like I might be had used to in the past. But what I can do is I can send Ethereum, or I can so they still have access to Binance over there. That's really the only solution. They don't have access to MoneyGram. They don't have access to PaySend, PayPal, any of that other stuff. The only way you can get money in and out of there now is with crypto. And so that right there is an interesting challenge for them. However, whenever the war started in Ukraine, I was like, okay, wow, the value of the ruble plummeted, and it was like $1 was 120 rubles. Now $1 is like 50 something rubles. I wanted at that moment, like, dude, let me load up on digital rubles. How do I get ruble stable coins, right? And so that's where there's a problem is that I can only get stable coins in US dollar, USDT, USDC. Where's the USD? Where's the Euro D? Where's the Euro C? Where's the Yuan T? Where's the Ruble C? Like,
sounds like you're listing off rap names or something.
I need these. You know what I mean? Like, it's almost like it would seem to me that a stable coin would be even more stable if it was a basket of currencies. And it was like, there's a little bit of gold, there's a little bit of dollar, there's a little bit of yuan, there's a little bit of rubles, there's a little bit of, whatever, rupees, like BRICS currencies. Like, what is the best sort of hedge now? Because we're like, oh, we're going to just put them in your stable coin. And you're like, then your stable coin happens to what happened to USDC. And Circle has too much, doesn't have enough liquidity in SVB Bank. And so now that's going down. And so, well, you don't want to keep it there. What happens if that goes away? Oh, put it in Bitcoin. Well, what happens if the price of Bitcoin goes down 15, 20%? Like, it's like really, it's a weird time to try to even figure out how to hedge your bet on some of this stuff.
Yeah, you're absolutely right. I mean, fiat currencies are intentionally designed to lose value over time. I mean, whenever somebody's trading the Forex market or foreign exchange, they're basically betting on which one is going to fall the fastest. And it's a weird game.
What a world, huh? Like,
all the countries
I think this one's going to fail the most. Let's go. Yeah.
The countries are incentivized to devalue their currency, because it promotes exports, meaning, if you if you're Switzerland and you're selling watches and, the franc goes down, your watches are suddenly cheaper elsewhere, right? It also devalues the debt that they have in their own currency. So countries are incentivized specifically. They don't even try to hide it. They call it inflation. I mean, we believe that inflation should be 2%. Why? You want your value of your currency to go down? So yes, Bitcoin is designed to go up in value over time. So if you're talking about saving, obviously it's volatile in the short term, but if you're thinking about a period of anything longer than 3 or 4 years, I think that the choice is obvious over there. But as far as decentralized finance, which was, kind of the topic at hand, I believe that the FTX, Celsius, and have highlighted something seriously wrong with the way that capital markets work. And it's not only them. I mean, we can name like Bernie Madoff, we can name like Deutsche Bank and Credit Suisse, and all of a sudden, like, just as they're in trouble, they get hit with these massive fines, right? They're always doing shady shit. And with decentralized finance, for the first time, we can actually see everything on the blockchain. We can trace all the transactions, even if we don't know who they belong to, and we can see where the money's going, how the smart contract is designed to work, right? Nobody can trick the blockchain and funnel money out the back end without some auditor going, hey, wait a second, where the hell is that money going, right? So yes, it's experimental in the beginning because you're playing with new economic models. Things get broken, but over time, those smart contracts get battle tested. And every time that a hack or a leak or something happens, the system gets stronger. Right now, it's not necessarily stronger than a traditional financial bank. I think that if you're holding a large amount of money, I personally at this point would not hold more than $100,000 in stable coins. It makes no sense. You have so many risks and none of the extra returns that you would buying
Yeah.
a financial asset.
We often wonder if the domino is going to fall on USDC or USDT. So we just had a guest recently on the show, our friend Clinton Donnelly, who's a crypto tax accountant and lawyer from understanding the regulation that's going down, and his take on this is that the US is not going to lose dominance because the US is a bully. They've put laws in place that make all the rest of the world report back on what US citizens are doing, and that they're doing everything they're doing to crypto is not to drive crypto out, but to put it under the umbrella of the brokerages that exist. The reason that they're not creating regulation, according to Clinton, is because they're instead going to enforcement, and that they are going to treat crypto like securities, and that you will go to Schwab or Fidelity or wherever to buy your Bitcoin, Ethereum, or any other coins. And they want all of the money from the world pouring into those brokerages in the US. They're actually encouraging crypto. They just want it done their way, where it's under their control. But you say that the US dollar will not remain the global reserve currency. So make those jive.
I mean, have you not seen the movie Nerds? Like, or any other movie where there's a bully that comes out at the beginning? We know how this ends. Like, there's one bully and there's the rest of the class. Like, literally, at some point, they're just going to band together and say, we don't need the bully anymore, and go play somewhere else or get their revenge because they're smarter than him. Not that the people in the US government are stupid. Gary Gensler is in no way a fool. Nor was Jay Clayton before him, but there's a revolving door. These type of people that are in power, they're always thinking about what are they going to do next. He's not thinking about his chair right now. He's thinking about what's his next job, right? He's thinking about how he's building his application. Jay Clayton, the previous SEC chairman, you know what he does now? You know what he did, like, as of several months after he quit or he was fired from the SEC?
High dollar speaking gigs.
Web3 company. In a Web3 investment firm. Literally, as soon as he walked out, he's like, hey, look at my qualifications. Pay me. All right. So these people's incentives are not aligned for the good of the people. They're not aligned for the good of the nation. They're aligned for themselves. They're selfish actors in a grander system, and they can't possibly work together towards a common goal. People say Gary Gensler and Elizabeth Warren, but look at like the people who are standing up for crypto, like Patrick McHenry and Tom Emmer, right? I mean, we saw them flaying Gary Gensler live. But so, especially within the United States, the political divide keeps getting wider and wider. It's going to be harder and harder for them to get together and actually create meaningful legislation. The only thing that Gary Gensler can do is stall. Eventually he'll be out, whether he's kicked out or he's quits or his term is over. There'll be somebody else, and that other person might continue his line of thought, but it might be in their best interest to go along with crypto. We'll see when that happens. In the meantime, I want to quote Lou Kerner, who's the head crypto analyst at Quantum Economics. He says, I try to spend about as much time thinking about regulators as they spend thinking about me.
That's great. That's great. So we've been really trying to hedge our bets and trying to figure out what is the best way to sort of hedge our bets as we are, in the bear market, moving into the bull market. And I got to give it to Joel, because Joel did really good. He bought a bunch of eggs at 6 cents, and then he sold them at 60 cents. Dude, he 10X'd his money.
It was excellent.
Is this cold storage or what?
Well, they're from 2020 eggs. They're not so good, but I mean, they don't know. You can't tell when you're buying them. Like,
right.
You can't tell until you open it up and you're like, why is this brown?
They were worth at least 50x when you threw them at your neighbor's house, right?
I'm looking back at all of those Halloweens where I was egging people's houses, and I was like, this was not cost-effective analysis. Where was quantum economics back in those days? They were not around. So,
wait, did you just miss the opportunity to say quantum economics?
I kind of did say it. I kind of said economics, but it still kind of sounded like, this is a good time. The stuff's going on right now. So putting on your hat that doesn't It's not the hat that's telling us the future, because you don't see the future. You're not Nostradamus. You're the guy who's going to say, well, maybe this is that, maybe that. So where are we in the grand scheme of things now? Like, because this looks to us like this chart, what it's doing right now, it's looking pretty healthy.
It is, but also it is looking, as my son said, overbought, or he said expensive.
Okay.
Literally, I mean, if we zoom way the flip out, right, and think about the block halving in a year from now or so, right, and then if we try to flip the log scale, obviously the long-term trajectory is upward, and especially if we think about digital scarcity and all of those type of things fundamentally. However, this is a daily chart where each candlestick is 1 day.
Right.
The blue line here is the average price over the last 200 days. And the red line is the average price over the last 50 days. So basically, we can see that we're extremely high over the 200-day average. Right. So it is expensive right now.
Do you know when it crosses, that's a good time to buy, right? That's like, oh, you can see where it crossed right there.
You're picking up on the golden cross right over here, which is the short term moves over the long term, which is the opposite of a death cross, which happened over here, and we've been going down pretty much in the bear market. So this is a very bullish indicator right over here, and it has indeed played out. However, I mean, reversion to the mean would probably not be unexpected. If we try to draw like a line of support, even if we assume, like, let's disregard this one over here, right? And then, like, you know, create a channel, right? Upward channel, but this is a very aggressive upward channel. I think that if we kind of do take into account, like, we have a kind of a wider channel here that we could say, this kind of makes sense. So like a reversion over here would not be surprising, 25K or whatnot, right? Or even, you know, touch the red line, possibly come towards the blue line, wait around here a little bit, let the blue line catch up, something like that. But obviously, I mean, these type of things, they do all, I mean, this is technical analysis.
Yeah.
So,
and for those of you listening, you might not have any idea what he's talking about. You might want to go over to YouTube, Rumble, or Odyssey to see the video version of this so you can see.
But Joel, I want to ask this, is that what was it, Mati, that you saw on that one day where Joel said, oh, it's 28, it's going to be 33 by Thursday, and it was on a Monday? What were you looking at that showed that? What was the signal that made you go, oh, damn?
So it was just flattening out, right? It was, so we have in the technical analysis, when the support line, which is the lower line, and the resistance line, which is the upper line, when they start converging, right? You have a range, which is where you have a clear high and a clear low. And when that happens and the market starts to get that in their head, they start going, okay, the average price is somewhere in the middle. So the buyers start to accept a lower and lower price, and the sellers start to accept a higher and higher price, or vice versa. Actually, I think my brain just farted. But the idea is that it becomes a triangle, turns into a pennant, and then the pennant has to break eventually, right? It has to come to the point of the triangle and break out. And what I was looking at was it was completely flat, or it was flattening for 3 weeks. It just got to the point where it got completely flat. It started to move a little bit, and I said, okay, now is a good time to make one of those price calls. And it worked out in my favor.
Yeah, it didn't hit 33.
Some of them don't.
It didn't hit 33, but it did go pop. So as long as we're talking price, let's talk price. For, you know, a year now or more, people have been saying, oh, Bitcoin's going to go down to 10 or 12. So let's go ahead. Two questions in this one question. One, is that never going to happen now? And two, what do you see us hitting for a high on the next bull run that we're expecting by late this year or early 2024?
Yeah, so nothing is ever impossible. You know, I think that we saw the meme, like, this is your last chance. This might be your last chance to buy below 20,000. I think I did tweet that out several times, and one of them actually might have been true, but we have no idea, right? And you know, so who knows? Like, this is the market. Literally anything can happen. my money is in Bitcoin. That's where I feel like, because I do believe in the long-term transformative potential of this technology. I do believe that digital scarcity is only found in Bitcoin, and something like Ethereum doesn't really recreate it, simply because Bitcoin's hard-coded into the 21 million cap. It will never be replaced. You guys know this. I don't have to tell you again. But what's different now is the ordinals, because the NFTs that are minted on Bitcoin literally are taking a Satoshi off the market. It's not the same as like Ethereum, where, okay, I'm paying a bit of gas, the gas goes to the miners, but now I have 1 million NFTs, whatever I want them to look like, it doesn't matter. There is no digital scarcity. There's only the project who says, we're only going to make 10,000 of these. But they might turn around next year and say, hey, well, we need another 1,000. Why? Because, hey, look, we voted on it. It's okay. There's no actual scarcity there. I mean, there's only a scarcity of as much as you trust the people who are controlling the smart contracts. Maybe the smart contract is designed to ensure that scarcity. Maybe it's not. With Bitcoin, that Satoshi is off the market, right? If somebody's holding that ordinal, I mean, he could spend it without touching the ordinal, but they're basically just taking it off the market. There's that Bitcoin literally
That's wild.
and hodl.
So there's 780,000, right? There's 780,000 ordinals so far. So that's not even one Bitcoin yet.
I believe the number is upwards of 1 million by now. I think Dune Analytics is the ones who are keeping track of it. I think we celebrated 1 million a couple of weeks ago. I grabbed a few toads under 500,000 because I feel like, I don't know, in 10 years from now, somebody's gonna go, you have one of the first 500,000 ordinals, right? Like, and that might be worth something to somebody someday. But literally what happens is that it creates, because as soon as people understand this, people realize it, as some already have, the fact that digital scarcity only exists on Bitcoin, that's only going to put the Bitcoin more in demand. And the more that goes, I mean, we've seen how frogs and monkeys and tacos, these type of things, I don't know why, cats, the internet goes, ooh, I like it. I saw, a GoFundMe page for a potato salad, which I believe hit 6 figures. So, I mean, people just go.
Well, it's really delicious. It's really good.
It's like, hey, I need to make a potato salad. Anybody want to help me? And then like suddenly he's having a potato salad party that was like a block party or something.
Yeah, it's good.
We're going to talk more about ordinals in an upcoming episode. We've got somebody coming on that's going to share some thoughts with us on that.
Probably knows more than me, honestly.
I went ahead and I minted one. I created the Genesis of Genesis. This is our Blockchain Heroes series, and I thought, well, what's more Genesis than the sketch that became the NFT? So I went ahead and I minted this just because I could. Ordinal 167,353.
Nice.
The question is around your assertion that these ordinals are going to cause Bitcoin transaction fees to go to $1,000. You just rendered Bitcoin useless.
Nope, not useless.
Okay, go ahead.
Not useless at all. I mean, actually what I was extremely upset when I came to this realization, because I saw the blockchain starting to flood. I mean, we were up to like 100,000 unconfirmed transactions. I don't remember the number off the top of my head. Just as ordinals came out, and there was a rush to be like the first ordinals on Bitcoin. And the blockchain was flooded. Miners were not keeping up with the load. And simply the transaction costs went from like pennies to like dollars. Like it went, I mean, I often send, $15, $20 to somebody in a developing economy, right? And like literally, it doesn't make sense to do that when it's $3.50, right? It's like you're okay when it's 10 cents, like, okay, who cares? Negligible.
That's Western Union types percentages.
And I DM'd Udi Wertheimer. I met him offline a few times. I like him. He's a bit weird, but like, dude, what the heck are you doing with these wizards, dude? You're flooding the blockchain. And we had this whole DM conversation in the background. And look, at the end of the day, I can't stop him from doing what he wants to do. It's Bitcoin. Just like the Bitcoin maxis can't tell me how to use Bitcoin, I can't tell him. Taproot was invented. It's on the blockchain. It's in the code. People can now do these things. He's just being a capitalist, and I can't fault him for that. He tells me, you said, look, if you're concerned about layer one transactions, use USD stablecoins on Tron. I've never used that before, but apparently it's a thing. And he says, well, you could try using Lightning Network. There are other solutions for you, sir. But the Bitcoin main chain is never going to remain cheap and easy to use as it is right now. And as soon as he said that, I went and bought some frogs, man. I guess, like, you can't beat them, join them, because, like, what the heck am I going to do? I'm going to sit here and shout till I'm blue. He's not going to stop what he's doing. It's just going to fuel the fire for other people to use these ordinals, and it just gets more popular. So literally, you just got to accept it and move on. But yeah, I mean, Ethereum transaction fees before, two successful, very successful so far upgrades, right? The merge and then the, what was it, the Shanghai or whatever it was called just now. It was $400, $500 transaction cost to buy a stupid NFT, right? So if Ethereum, right, pre-scaling reached $400 or $500, and there's no digital scarcity involved, and at the time there was an inflationary model, right, is going to reach $400, $500. I mean, I'm pretty certain that Bitcoin can put that to shame. I mean,
Yeah.
if we do see that kind of rush to ordinals.
So let me ask you this then, because one of the things that we chatted about multiple times over the years is, so Bitcoin, there's 21 million Bitcoin ever. One of the things they could do is just move the decimal point. So instead of having 8 decimal points for Satoshis, maybe now they have 10, maybe they have 12, and then it just makes a Satoshi worth a lot more because now that's divisible.
You
Do you
just
foresee
gave
that
Mate,
happening?
The
you just gave him
Militoshi.
scrunchy face. Did you see that when
He
you
was
said
making scrunchy face, Mate.
Yeah.
I mean, you can do it in a centralized platform, right? I mean, literally, if somebody's showing you a balance, that's a fraction of a Bitcoin, and there, I mean, you can transact. I mean, there are transactions that don't round in traditional finance. I mean, if you're with your bank and it happens to come out with a half a cent, I mean, maybe they'll round it off and keep it for themselves, but they could technically, keep that half a cent on your balance.
Well, I mean, think about it. Bitcoin becomes worth $1 million, then one Satoshi is technically worth $1. And it's like, well, we need to be able to divide that further. So I think it just depends on how high the price of Bitcoin gets before the Bitcoin, Foundation votes on that and says, well, let's just move the decimal point.
Yeah, and that vote could potentially be extremely divisive.
Yeah.
You don't just need 51% to agree, because that you're going to have militants fighting it, and you're going to have blockchain Bitcoin caches and Bitcoin Cash ABCs and these. And is that really worth it? And and it's going to be it could potentially be a war, literally. Like, people could die over this shit, man. So, like, I don't know if that's ever going to happen. It would require a broad consensus of the entire world population. And I don't know if you know something about people, but they don't usually agree on everything.
That's the truth. Okay, so there's an answer I didn't get from you, and that was calling this next bull run. I know, you say you don't like to make predictions, but you do like to make predictions. We're just not going to hold you to them. You make predictions all the time. So the next bull run, when do you think it's officially going to start? Set a date range, give it 30, give a month in year. And then how far do you think we'll go on this next one? You got to have something in mind.
I think it's already started. I mean, I'm fairly certain, like, with a 98% certainty, we've seen the bottom already, right? Yeah. I mean, 16,000, that's pretty damn low. That start of 2023, January, taking off like a rocket, I'm pretty sure that's it. So,
but that's, I mean, where we are now, that's not a bull run signal. Like a signal.
That's like 16 months before the halving.
Yeah,
right?
Maybe 40K is a signal. Like, what's the actual signal that we're like, yeah, we're going to the moon, and this is how many dollars up.
Joel just wants a text. Could you just message him on the day that it
No,
looks
I want
really
to
good?
know. I want to know right now.
Send him a
I don't
message.
know. No, I literally, I mean, anything that I could say is just an educated guess.
That's
but,
fine. We'll take it.
Yeah, so I think that we're about, let me share my screen again. And I'm going to use, even though I think that Plan B is a hack, and his predictions are silly, this chart does have something to it as far as the halving cycle is concerned. And then we're at around this where it's getting this dark green area. And if we think about 2019, that was a fake out, like a huge fake out, right? And then it leveled out around 10,000, stabilized around 10,000 for a while until the halving started, and then the bull run really kicked off after the halving. But also this weirdly correlates with monetary policy, right? And it's difficult to tell which one's influencing which. And according to our research at Quantum Economics, more than the halving, the number one thing that really affects Bitcoin price so far has been the Federal Reserve. Mm-hmm. And when the printing presses are on, a lot of that money is being channeled into Bitcoin. And when they start pulling back and money gets scarce, people need to sell off their Bitcoin to pay the bills and fulfill obligations and shit like that. So I mean, literally, it can be seen. I mean, 2017, 2018, I believe, is around when Janet Yellen started pulling back the monetary stimulus and started leveling off, right? And then, once COVID hit, they just turned the printer on, go burr, right? And all the way up. So you literally.
So it looks like we're going to get to that. So if you don't know, this is stock to flow model. He's looking at buybitcoinworldwide.com/stats/stock to flow. You can see that over on the side. So when that turns to that darker green, then it's going to turn to blue, and then all of a sudden it turns red. So is that? But it looks like from when it hits red, then it really starts taking off and going off again, like restarting or something. So I don't really fully understand that.
Right. It's right before it turns orange. So what happens when the halving comes is basically like, imagine the mine. It starts with the miners, right? And we're setting up a Bitcoin mining facility at the moment, so a little bit about this. Basically, the miners are getting a set reward, right? And they have their calculations for how much hash they're contributing, how much their machines cost, how much their electricity. They're throwing all of these things into a big spreadsheet and making their calculations. Now, all of a sudden, I mean, it's happening in advance, but all of a sudden, that reward, that profit, that revenue that's coming in is basically cut in half. It's like our COO, Jason Dean, who's running our mining operation, explained it one time in a blog at the last halving, which was brilliant. He basically goes, it's like sticking your hand in a jar of beans and just, constantly the jar is full and you just stick your hand in and grab the beans out, and all of a sudden the jar is pretty empty. Like the beans just aren't there anymore, right? So suddenly the Bitcoin starts to get scarce. Right, not the people who are hodling or the people who are selling it up. It's where the mining rewards start to affect the natural flow of the market.
Okay, you still haven't answered my question, and I'm going to hold your feet to the fire for the third time, Mate. When and how much?
Oh,
educated guess. We accept that.
Can I throw this out there? Because it seems, looking at that stock to flow model you just showed, it's going to be over 100,000. It looks like that's a no-brainer. But how high would it get this time? Versus this or the next cycle?
Well, $1 billion by eventually. I mean, last time you guys tried to ask me this, I think that I was pretty explicit, like anywhere between $100 and $1 million by the end of the year. Like it can be anywhere in between.
Yeah, but you don't believe that because your money is in Bitcoin for a reason.
Well, because I don't believe in the dollar and I have no other alternative. I believe that Bitcoin over time will go up because it's the only instance of something scarce that we have other than gold, and gold is not transactable. So it only
And
makes
gold's infinitely not scarce if they find a big ass pool of it somewhere, right? Like they did in Uganda. They found a bunch of gold. Like, whoa, nice.
I got some gold coins, man. It's okay. When
Dude, I
someone
feel like a pirate, dude, holding a bunch of gold coins. You're like, yarg, matey, fucking yeah.
because if
You
the
know,
internet goes down, Bitcoin isn't going to save you. You have to have something to barter with.
yeah,
Only,
bullets.
actually,
You gotta
silver
invest in
coins
bullets.
because you don't want to spend a whole gold coin on. Here you go.
I got a gold ring. This was my father's. It was one of the things.
Is that a lion?
Yeah, it's a
That,
lion.
if the internet goes down, that might get you a gun, literally. So but silver coins, I think, are a bit more transactable. If you need a loaf of bread, you don't want to give that gold coin away, right?
Right.
You got to have a bit of both. Maybe some diamonds also, because that'll get you out of the country, right? So literally, you got to be diversified about these things. But I mean, for myself, a few $1,000s, I'll stick it in DeFi because I'm playing around with it and building the system, making it better every time I'm using it, using a yield, using a smart contract, making the system grow, making the system strong. Yeah. For anything more than 20s, 30s, 100Ks, like you gotta be in Bitcoin because like it's not really much of an alternative to me.
So it would seem to me, looking at the chart, that this go round, maybe we hit 250K, like $250,000 potentially, as a potentiality. And if that's the case, then Bitcoin just did almost a 20x, right? It did a 15x or something. And then it'll come back down to the 50K range or whatever before it goes up to the next big number, right? If it does that, it goes 50K, then comes down and then does another 15, 20x, then it hits the million. So it's like, is that within because I know, John McAfee was always joking, oh, well, if it doesn't hit 1 million by the end of 2020, I'm going to eat my junk. And then little did he know, Spain was going to eat his junk. And then,
and you know what the thing about that is, Travis, and then especially as far as influencers are concerned, whoever picks the highest number wins.
Yeah, you get the most. So influencer Monty Greenspan says Bitcoin to hit $250,000 on the next bull run.
Oh, why that, man? I'll say it's going to hit $10 billion by tomorrow.
Oh shit!
Yeah, let's go viral. Like what the hell?
Let's go viral.
Well, Tim Draper does that a lot. Tim is in the news a lot for making projections.
Yeah. Well, that's because he auctioned it. And got a whole shitload of it and was like, "Oh, I got it for super cheap. I really want this to be really high. I got a lot of it."
Yeah, no, usually but that's for small time influencers. The big guys like Jamie Dimon, man, he tries to squash it so he can get it cheaper.
Yeah, Jamie. Well, Mate, we appreciate you coming on. Your website is quantumeconomics.io. You guys can go sign up for a free email right there. You guys just did an acquisition. As you say, you're playing with DeFi, Revolt Network. What does Revolt Network do, and what does that lead you into now?
Yeah, so Revolt Network is a place to find and allocate money within the DeFi world. Basically, we don't own the smart contracts, but we allow people to search all the smart contracts that are out there and find the highest yielding ones. That, in my mind, is the true meaning of DeFi because it's decentralized. We're actually not the broker themselves. Nobody's handing us money. We don't custody any money, but rather we're a gateway to finding smart contracts and liquidity pools where people can, in fact, earn the yield. And of course, this is a very early stage, a very early iteration of it. But eventually, we add tools, and obviously, this is safe enough, not safe enough that I would recommend anybody put some serious money into. But you could play around with it, and on small money, and there's no limit to how small. Also, there's no, because the blockchain, you can literally come in with fractions. But the idea here is that we add tools to make it safer. Insurance and smart contract auditing services. I mean, those are the obvious ones. And the more, a smart contract has been audited, the more you could say, wait a second, it's more safe, more eyeballs, more programmer eyeballs have been on this. And the more you have insurance, the more somebody can say, okay, well, I'm willing to pay out of my profits a little, few percentages because it might blow up in my face. And if it does, I'll get my money back, right? So this is in my mind, how we make DeFi stronger. And this is, in my mind, the type of tool that's going to allow us to do it.
I find
Beautiful.
that revolting, Travis. What do you think?
Well, you need to stack your Rivas, I guess. So let me ask, somebody asked that. So it's a platform, they have their own token, but you were able to acquire the company as a thing. So it's a centralized thing of some sort, but it helps people with decentralized finance choices.
Not only that, the old development team who I got it from, literally they kind of sort of rugged. I mean, I would say that they ran into bear market trouble because like they were trying to get listed in South Korea, and then Terra Luna happened, and then I don't know, the founders started fighting. They stopped talking to the community. It's actually run as a DAO, right? So in the legal documents, when we were going through the legal documents, we realized that actually the DAO has to be on board with this decision. Like the DAO have to vote to be acquired. And we spoke with the DAO, and we actually had several AMAs, and people liked our vision, obviously, and the vote was unanimous. We had 1.4 million Rivas in favor, 0 against.
Wow.
So, yeah. So I mean,
I would have voted against just out of principle because it does need to be unanimous.
That would be incredibly vindictive.
That's how I roll. That's good. Thank you.
That is not nice at all.
Thank you.
You can follow Mate on the Twitters at Mate Greenspan, and he's going to make predictions that says Bitcoin's going to be somewhere between $100 and $1 billion. I'm going to bet that he's completely accurate about that. Mate, thanks for coming on again and sharing with us, man. We appreciate it.
Thanks a lot for having me, guys. It's been a pleasure.
Okay, I'm not triggered anymore. That's
good.
So
good. I'm so grateful to hear about that.
I'm untriggered.
I was worried.
I'm de-triggerfied.
You know what we could do, which would be kind of fun, I noticed, like on some of these interviews, is like we should take a wide background image, slice it in two, and then whenever we're there, it would look like if we had that earth you have behind you, and we had like one big earth, like a big rainbow, like we could both be on both sides of it, and it would look seamless. It would look cool.
Well, you're the artist. Make us a cool looking.
Maybe we can do one of those. I'll try to find one of those extra wide ones, chop it in half. You get one, I get the other. Just make sure we're in the right place, and they can look cool.
I'm feeling extra wide these days.
That's good. Well, you're about to go on a big cruise, so you're going to come back probably wider if you don't pay attention to that.
That may or may not be true. Yep. Spring vacation.
Oh, it's a buffet again, everybody. Time for the buffet.
We got a lot of things going on, gang. A lot of great content coming your way. Thank you for sticking with us, and please tell a friend about the Bad Crypto Podcast. Convert a phone. I do this. People are like, "Oh, what show do you host?" And I tell them, like, "Oh, I should listen to that." I say, "Well, hand me your phone," and I take it and I go to their podcast player and I either follow or subscribe depending upon what they're using to listen, and I convert them.
Follow us on the Bad Crypto Podcast on the YouTubes. That's good. We like subscribers over there. That's really helpful. And a lot of our stuff is becoming more visual. So if you're a visual person, tune in that way. It's kind of fun. You can, especially if you got a smart TV. We've been doing a lot of cool stuff with that. So
it's because we get more attractive the older we get. So
I tell you what, I'm debonair as fuck. I don't know if you know that or not.
Suave
debonair AF.
Suave and debonair.
Well, and then I would say Joel is pretty swass.
I'm bad.
That is a 1980s flex term right there. Don't you wish your boyfriend was swass like me? Swass. And then somebody else redid that song later, but it was Swass, Sir Mix-a-Lot. It's an early Sir Mix-a-Lot song before Baby Got Back, matter of fact.
Okay.
So now
things I did not know, and now I do know, and now you know, and I know that you're going to do something for us, and you're going to stay bad.
Stay bad.
Stay swass.
Stay swass.
The Bad Crypto Podcast is a production of Bad Crypto LLC. The content of the show, the videos, and the website is provided for educational, informational, and entertainment purposes only. It's not intended to be and does not constitute financial, investment, or trading advice of any kind. You shouldn't make any decisions as to finances, investing, trading, or anything else based on this information without undertaking independent due diligence and consultation with a professional financial advisor. Please understand that the trading of Bitcoins and alternative cryptocurrencies have potential risks involved. Anyone wishing to invest in any of the currencies or tokens mentioned on this podcast should first seek their own independent professional financial advisor.